My name is Marco Vitrò. I am Italian. I'm 65 years old, and I am chief teacher of the International School of Trading. As you can read, the motto of our school is simple. There are no expert traders or beginner traders on Forex, but only traders who lose and traders who gain. What does it mean, these simple words? It means that experience in the human activity is nothing, because experience has as a unit of measurement the time on which it is done. But the capacity as a unit of measurement, the results, and not the time you're working. So that's why it doesn't matter if you are experienced. The only matter is if you have a result. And I am here today to show you what must be the result and not what could be the result. Because when I teach, I never use words like you should, you could, you might, but my imperative lexicon is always you must and you can. Because everything is founded, based on the future, on the prevision of the future, cannot give us the insurance to have a good result. This is what is very important for us. You know, all of you here is a trader or would like to be a trader, but all of you want to be trader to get money, earn money, only money, all much money. But the real advantage to be trader, as I discovered in my long life, is to get the free time. That is the real advantage that a trader should have. Free time for himself and not only the money. As this trading can give you, because the richness of a man is that, it's not only the money. We never should lose this. People call me professional trader or top trader, big words. Doesn't mean anything, nothing. It only means that I am able to sit anytime I want, from everywhere I want, to sit in front of a computer and to earn any way, anytime, however I want, with method and simplicity. This is what you must reach, to be able to earn anytime, anywhere. Always and anytime. Always means anytime you want to work, nobody decides for you. Always, when you want. But especially is any time that is difficult. Because any time means to really get profit when you meet the market is going on. And not only when the market meets your operation. The random operation happens to almost traders, which are going to alternate period of gain with period of loss. This is a matter of random operation. Constant profit is what you must reach. This is the only objective you must have. And you will see how to have. To be a good trader, you must have the knowledge, foreknowledge, good methods of trading, a good knowledge of money management, perfect psychological management of real operations, and a good broker, not your desk, with a professional platform. What means good method of trading? You know, what is the main problem of every trader? The main problem consists only in the impossibility to know in advance which will be the trend of the instruments, the financial instrument on which you intend to work. That is the only problem, no more. And to solve this problem, somebody thinks that can be helped by technical analysis. This is not my opinion. Of course, technical analysis can help us. But unfortunately, it never gives always a complete information to make trading. Others, plus technical analysis, are the factors who allow us to have our profit. And now, let's see. Of course, we must have our knowledge. Is it enough? No. We must use our knowledge into the experience. And only when we have both of them, knowledge and experience, we will get the ability to work on trading. Only technical analysis is the knowledge alone. It's not enough. Put it in the experience. Make your mistakes. And then maybe you will have the ability. These are the three major methods of trading. The first one is trend following. Almost the strategies which are taught around talk about trend following. I'm not here today to teach you how to follow the trend. I could, of course, but today I want to speak about a different way of doing trading, which will be the spread trading. Trend following is a very, very difficult way of making trading. You know, almost of trading strategies are they lose. As they lose because they're based on the prevision of the trend. But I can say in this world, nobody can know in the future trend of everything, not only the trading. So if you start basing your trading on prevision of the trend, 80% you must lose. Sorry. I know that I'm telling you something disturb you, but this is my opinion. Let's think about spread trading. This is my preferred strategy. Because as I said before, I base everything on this opinion, this sentence, that it's not possible to know in advance the trend. Using spread trading, we can solve this problem. Spread trading, let's see what it is. Regarding trend following, I can give you just simple information. Simple information is this. When you want to do trend following, if you like to do trend following, you should do what you observe is going on. What is really happening in that exact moment on which you see it is, and not what you presume you could be. In the spread trading, everybody does what everybody does. So you do the same as the others are doing. This is the basic concept of the trend following strategy, nothing else. do what the other does. How the people teach you how to do. But that is trend following. Non preview, but just observe what is happening in front of your eyes, and do what you see you have to do. Let's leave to people who do the horoscopes or magician the prevision of the future. It's not for who want to do the trend following. This is a spread trading. What is that? Almost of you maybe already knows. Just repeat what it is, the concept. Conceptually consists in the simultaneous opening of two opposite positions, long short, on two correlated financial instruments, so that losses and profits are always balanced. Alternatively, even the presence of strong decreases or tendency uncertainties. The operating techniques can be considered as the only highly speculative trading system that protects against any trend. I apologize about my pronunciation of English. I hope you understand me anyway, if I don't speak the pure English, okay? You know, variation of the market, allowing you to always, and in any case, earn in predetermined way or low risk drawdown. We'll talk about drawdown later, in proportion on very high profits. Now, what is the risk? I said before, the risk is only consists in the impossibility to know advance what will be the future trend of the financial instruments on which we're going to work. How is working the spread trading? It's working opening two opposite positions, long short, of two correlated instruments. Correlation means that two instruments has always and ever the same trend in any case, whatever happened in the world, in the trend. This is trend. This is correlation of the two instruments. Many are the financial instruments which are correlated between themselves. I prefer to work, for example, on Australian dollar versus New Zealand dollar, because Australia, when I use Forex, on spread trading on Forex, of course, because Australia and New Zealand are both of them in a English Commonwealth. Yes, tell me. I'm sorry, I can't hear you. Better I come near you. I'm old, I don't hear very well. What you say?
Okay. What I just said about the correlation markets, or what you just said about the correlation markets, has been thrown down the toilet this week.
Did you understand? Please, try to say in simple words.
What you said about the correlation markets, this market moves this way when this one moves that way. The events of this week have thrown that out the window. You look at how many markets have dropped, and normally when one market drops, the other one goes up. That has not happened this week.
If I understood well, when I speak about the markets, I say that every kind of market. We have commodities market, forex market, stocks markets. And I mean that I can see what is going on the chart, but I can know what will be going in that market. That is the fundamental of the spread trading that I'm going to explain to you. And I don't know if you...
is it not possible to simultaneously open two opposing positions in one instrument, say USD and GBP? One you open as long, another as short, but with stop losses adjusted, so that even if they go on the other side,
Okay. Look, I just started to speak about this kind of technique. The advantage of the spread trading is that we have no stop loss, because one protects the other one. So we never know who is going to lose, who is going to take profit, because the profit of the one will cover the loss of the other one. If you let me go ahead in my explication, then you can make all the question you want. But first I must explain what I mean. Otherwise, any question can be good or bad, okay?
if you open a GBP USD, taking a particular concrete example, one long and one short, and you could say $20 sort of as your stop loss in both cases, and 40 as your win. So when you lose, the one will lose $20, but the other will gain, so you gain $40.
Yes.
Obviously,
Yeah.
you will be always safe that way.
Yes.
Possible to open two opposing trade in one instrument, like GBP USD, something like that?
Yes, it's almost something as you said, but when you reach at the end of my presentation, you will understand better what I mean, how to open, okay? We're just at the title, just beginning now. I want to arrive, how to do it, okay? Little by little, I like to start from the theoretically and reaching how to do it, okay? Just a little bit patient. Huh? Okay, what was talking? This is the spread trading. Let's change. Let's go ahead how to do, okay? So you'll be happy. As I was telling to you, I like to work, especially when you work on Forex, on the Australian dollar versus the New Zealand dollar. Because Australia and New Zealand both in British Commonwealth, because they are geographically near, because their economies are almost similar. That makes them very correlated. And we have a sample here about what I'm telling. As you can see, we have Australian dollar, Aussie, and New Zealand dollar, that Kiwi, okay? You see, trend is the same. Of course, not equal, but trend is the same. Just observe this, because we'll talk about it later. We can see also, here we have Australian dollar, yen, New Zealand dollar, yen. You see, same trend always. Not equal, but similar trend. This was interest to us. You see, the difference we see on their trend are the basic of the strategy and what produce our profit, the different. Where we can also make spread trading, for example, is on index, the biggest, the more important European index, like CAC 40 from France and Eurostock 50. You see high correlation with them, same trend. I'm just showing the more important correlated instruments on which you could do spread trading. Now we see how to do. Or we could work also in two petroleum commodities as the Brent crude oil and the light crude oil. You see, always same trend, same trend. This is what we like. Now, we could also, if we like to go overseas, work on the American index, the principal American index, which is Standard & Poor's 500 and NASDAQ 100. Same correlation, always same trend. These are the instruments on which I suggest to work, on which I work, really. Now, what means correlation? I think you understood. What I show you are directly correlation. But in market, we have also the inverse correlation. What means that the two instruments can have same correlation, but going in contrary directions. A classic example is euro-dollar with dollar franc Swiss franc, okay? You see, they have the same trend, but in contrary directions. Even on this, we could work, if we know how to work, of course. Now, let's see how to work and when to open a position. I repeat many times that the problem is always to know in advance the trends. But for this reason, we can say that the risk of doing trading is only in this, the impossibility to know at advance the future trend of the instrument on which we are going to work. That's the only risk we have when we make trading, okay? So how to work, how to open a position. As you was telling, as maybe I said already, I don't remember, we should open two different positions, contrary. Long one, a short one, the other one correlated. How to open? One simple way is, in case in upper trend, we will sell the instrument rising more and buy the instrument was rising less. In case of down trading, decreasing trend, we will buy the instrument who get more down and sell is correlated or decrease less. Let's see an example here. What we must do, this is the theory, but in truth, for opening the position this way, we must consider how to get the profit. When we open two different positions, one long and one short, we will always have any trend we are going to meet, one position which will be prevalent to the other position. So one will get gain, the other one will get loss. But it's just a matter of time, because after that, the one get profit will be higher or the one get loss. In this case, we see from our balance, and we close at the same time both the position. So we open at the same time, and we close at the time simply when we see in our balance that the position is taking more profit or one or the other one is losing. In balance, arithmetic make profit. This is one way of taking profit. But this strategy of spread trading is called also convergent spread trading. Why? Because it gives us another way of getting profit. How? Let's see some sample. First sample, as I told you before, in this case, and why we see this case? Because we must know when to open the position. We will open a spread trading position when we will understand that we are in presumed good divergency. Presumed good divergence. As in this case, you see, this is divergence. In this case, very simple for me to understand what to do, because I will sell and New Zealand dollar, and I will buy Australian dollar with US dollar. You see, when the trend moves, the short position take, in this point, take more profit of what lost the long position. So when they meet, we also meet. All this time, we got one taking profit, one losing top profit, until here that we are sure that the short position was running more of the long position. Of course, the long position lost, but the short position takes much more money. It happened here, for example. It happened here again. What we are going to do here? We have a good divergence here. We buy New Zealand. We sell Australian. And what happened here? Here we take our profit. Why? Because what we bought was rising more, or the one lost was rising, losing the short position. We sold this, we bought this. Here, as you can see, it's easy to see. This take profit, this lost, but the profit that was taken by this position was much more of the one we lost, much more. And see, in this case, one is losing, another one is taking profit. But we can have another way of taking profit, when both of them are converging. As we can see here, for example, big divergence, sell this, buy this. When they converge both, we both take profit. The one we sold take profit in the short position. The long we bought take profit. So we took profit with both of them. And we can see everywhere. Even here, you see? Look. Sell this, buy this. When they meet, we take profit with this short position, we take profit with the long position. Both profit. And everywhere, we can see, all over we see a divergence here again. Sell this, buy this. When they meet, we take profit with both. But the real advantage of the spread trading is not this. We can take profit even with another kind of strategies, no? We are here for profit. All the people before me was teaching you how to take profit, no? But the real advantage of the spread trading is that we don't care about the trend, because how it's going trend, we don't mind. We always will have one is taking profit, one is losing profit. Just wait that the one is taking profit take more profit, or the one is losing. And sometimes, as I've shown here, there, and here, we can even take both profit. But, as I said, if we don't mind, if we don't care about the trend, and if it's true, I said before, or you agree, that the only risk of a trader consists in the possibility to know in advance which will be the trend, in this case, we don't mind about the trend, so we have no risk. We have no risk. This kind of strategies is the only one. University knew as the only strategy that has no risk. Now, this is now about this, because I have to continue with some other things. If somebody has some question, can do now regarding the spread trading. Any question? We have no stop loss here. We don't need stop loss. You see, this is very beautiful. We don't need stop loss because one protects the other one. Anywhere how is going the trend, I will always have one of instrument protect the other instrument. And even I can put the stop loss, I can put the take profit. Why? Because I will never know which one of those two will take the profit, which one of the two will get loss.
Initially, I said, why don't we use the same instrument and using stop loss? Say USV.
No, that is a game. Same instrument, but no, it's a game. If you like to play games, okay, go. There's no way to take money. Not the same. I can sell gold and buy gold at the same time. What's the reason? No, because I can know if I make a stop loss somewhere, if then was going back or increasing or what, I can know. I don't want to worry about the trend. That's the reason. Yes. Please. I must give you this.
Spreading is quite popular on a small time frame, isn't it? But what's your preferred time frame for this?
No, the time frame is 1 hour. We are going inside how to do really. This is a matter of my course. Of course, I'm doing here a presentation. My work is to teach, be paid for teach. Anyway, I can answer to you. Anyway, the time frame you are going to use when you do it is 1 hour time frame. This way of make trading is not popular. I don't know why. It's the only trading system who doesn't lose, but it's not so popular like trend following. Many talk about, but I don't know how many knows how to do it. It's different. If you go on Google, look, spread trading, you see what means, but not how to do it. Huh? No, you know the termination, what it is, but not how to do. There is very different from practical and theory. We are talking about practical, how to do it, okay? Answering to your question, then I go ahead. The time frame for checking the chart is 1 hour time frame.
Is it the candlestick is 1 hour?
No, online.
When you say time frame, is it the 1 hour candlestick you're using?
1 hour, online, like as I show you. On time frame, 1 hour.
Duration of the trade, not the candlestick, 1 hour candlestick.
Not candle chart, but line chart. Line chart on time frame 1 hour. This as shown here. Now, see if you have no more question about trend following. I want to speak. Oh, did you? Everybody understood that this strategy is zero risk? You agree? If you don't agree, tell me why you don't. Okay. Good for me. Now, let's see the scalping method. In truth, I don't like scalping because it stressed me too much, because it forced me to stay in front of the chart hours for doing several operations. I don't like, because as I said to you at the beginning, the advantage of being a trader is to get free time, not only to earn money. And then maybe I have to do several operations to get the same result I could get with other strategies. But one advantage has the scalping. One it has. That avoids the problem of the trend. Because there is no sense to think about the trend when you use a range between 1 minute and 5 minutes. Trend is not important in this case. And my preferred scalping, the one I teach especially, is not on time vision of the chart, but if you don't know, look for with Renko visions. Renko visions, Renko bricks is a way of looking at the chart. It's more easy, when you know, of course, to do the scalping. I just show you a sample. This is a chart with Renko. The difference between a time chart is that each candle is the same measurement of the pips you decide it should be. In this case, we have Renko 5, means that each brick measures 5 pips. In this way, for who likes joke with the scalping method, will be much more easy to do it. But this is not, I teach it, but it's not what I like. Yes, don't forget that to know money management is important, same as maybe much more than to know the method of trading. And if you don't know it, forget to be a good trader. Almost of you, I'm sure, know, so yeah, thinks to know everything about money management. Allow me to tell you what I mean to know money management. This, what I've written. First, how to calculate the stop loss before opening each operation. Second, how to calculate take profit before opening each operation. Third, how to evaluate the risk of the operation. Fourth, how to know the expected maximum drawdown of the strategy. Fifth, how to calculate the best financial leverage of any operation. First, how to calculate the stop loss. You see, the stop loss must be always, imperative, always, before opening every position. And the stop loss cannot reduce it as a mere percentage of our capital we're using, our equity, or a simple numerical proportional with the take profit, like people does as 1 to 2, 1 to 3, referring to the take profit. The stop loss we can use, for example, on euro dollar cannot be the same, the stop loss we are using on pound yen. Who does trading knows there are very big difference. Same, the stop loss we can use on time frame 1 hour will never be the same stop we can use on time frame of 5 minutes. So stop loss must be calculated. And you must know how to calculate. It requires a special, unique way of calculation. Then, how to calculate the take profit. Take profit as a calculation which is independent from the value of the stop loss. Almost people think that stop loss should be lower than take profit. No way. Not true. You can have strategies, moment, or intention on which require that your profit can be much more or less than the stop loss. Just to say you, last year I was doing an international trading competition using trend following strategy, and I put, from calculation, take profit in euro dollar, 5 minutes time frame, take profit 10 pips, stop loss 50 pips. So if somebody says, how is possible? When you take gain, you take 10 pips. When you lose 50 pips. But depends how many 10 pips I take and how many 50 pips of loss I take. So they are independent calculation. And you must know how to calculate the profit before opening each operation. Somebody says, oh, I don't need to do it because I just watch the chart and then I decide when to close, if to close. No, these people, I think, never did real trading with important money, because for understand if you are able to be a trader, you must put on play important money for you, not monopoly money or demo money. Okay? Then how to evaluate the risk of the operation. You know, a good trader, as I heard that the man was before me here, a good trader thinks first how to control the risk and to limit the loss, not to the profit. But easy to say, difficult to do. How to do it? You have two ways. First, you must have a strategy with proved in the time that bring gain constantly, constant profit. And then you must use a level of your operation which must be low level. You know, the brokers are almost market makers. Almost. And it means that they earn the money you lose. And they suggest you to use high leverage, 100, 200, 300 or more. This is an illusion they want to give you, but contrary to this illusion, be sure that more high will be your leverage and faster will be your losing of all your money. We must build our profit brick by brick, same as buildings. So for doing this, we must use low level, always. But when I say low level, I mean level 5, maximum level 10, never level 100. Like maybe many of you are used to work. And then what you must know is the drawdown of your strategy. If you don't know that, if you don't know at which drawdown your strategy is exposed to you, and I mean, in the two characteristics, the two parameters of the drawdown, the percentage of losing of ratio percentage of your capital and the time of the duration of the drawdown. In the first case, if you have higher drawdown, you will lose money. Simple. Even if the duration is too long of the drawdown, you will lose because you lost you will never trust what you're doing. If the drawdown is 1 month, 2 months long, and you will make mistakes and maybe you close your position even if you could wait to take profit, because drawdown means the loss you must have before getting the profit you're waiting for, not the loss points. Just temporary, not losing money, but just for such time. And you must know of the strategy what is the real drawdown can give the strategy. In the end, this is what all the people fall. You must know how to calculate the leverage of the operation you are doing. Know how to calculate. It's special calculation. As I told you, brokers, market makers push you to use high level. No. You must know what will be the real good level of your operation. If you miss any one of these points of your knowledge, you will never get profit. Sorry for you. It's not enough to know the techniques, the method, the strategies, that's the strategies. But if you don't know this, you will lose, as you may be lost already. Because if you are here, means you are not able to have a constant profit. Otherwise, you was at home. Or means that you lost the game already. Now, about the brokers. I'm not here, I don't want, it's not my intention to suggest you some broker. My mission is to teach, nothing else. But I can tell you, choose your broker, which must have some characteristic. First, should be no dealer desk. Second, should not apply pips on the spread offer. Third, should have a good reputation, public good reputation. Fourth, should give you a good platform, professional platform. What is a professional platform? Is that platform which allows you to put your order directly in the interbank market, crossing everything the market of the market maker of the broker. Until you don't know, you have not the chance to put your order directly in the market, the real market, the real interbank market, you will never get loose. You will never get profit. This is what your broker you choose should have. Then, what I said until now is all theory. There is a big difference from theory and practical. Anyone as I said, learn easy practical trading methods immediately applicable by anyone. Visit our site, our website, who wants. Because in just 30 minutes, I even have difficult to explain what to do. Just the title. To become a good trader needs more a strong teaching. That's all. Thank you for your attention. I hope to meet you in the next meeting.